Good morning. Welcome to 3 Minutes on Markets and Money. Lots of stuff to go through here chart-wise, so bear with me as we move fairly quickly through the markets overall. Yesterday, we talked specifically about the triggering of the money flow sell signal. We said yesterday if the market sold off, which it did yesterday, we would trigger that money flow sell signal, and we have negative money flows in place as well. So yesterday morning, we used that opportunity to lift a bit of exposure out of portfolios. We raised a little bit of cash. Nothing extreme at this moment. Markets are going to try to rally a little bit this morning, but the weakness is already starting to set in really here across the board, and we're seeing weakness in areas as that value rotation trade comes out of the market. Again, if we take a look now at particularly small caps, brutal day yesterday in small caps, but they've already been under pressure now for several weeks. But even with that sell-off at this point, just recently triggering its money flow sell signal as well. Money flows are deteriorating here. Big MACD sell signal here as well, very close to breaking the 50-day moving average. So keep a watch on small caps. This has really kind of been that momentum trade here as of late as people have been kind of chasing these small cap, low price stock names. That's been pushing this index up. It's extremely extended from its long-term moving averages. So again, there's lots of room for correction here in the short term. Also keeping a watch on emerging markets. We've talked about the strength of the dollar here. Dollar's been ticking up. That's been getting stronger here. That's been weighing on emerging markets as you would expect. Money flow sell signals about to trigger here as well, suggesting more downside for emerging markets in particular. Still a decent gap here to get back to the 200-day moving average, so there is decent downside in emerging markets. Also in international stocks, very close to triggering a money flow sell signal, sitting on the 50-day moving average. Looks like this is going to try to get weaker here as well. So again, this all comes back, though, as I said, to the dollar, because the dollar has been strengthening. Nice set of rising bottoms here. Trend is turning positive above the 50 and the 20-day moving average. About to run into resistance at 200, but if it gets above that, there's room for the dollar to strengthen fairly markedly here. And this potentially is going to line up with a rotation coming into fixed income. Now, as we approach the end of the month, this is the big thing, right? We've got rebalancing here. End of the first quarter, pension funds, mutual funds, etc., all have to rebalance portfolios. This is probably somewhere north of $100 billion to $200 billion of rebalancing potential because of the rally in the stock market and the decline in bond prices. Portfolios are well out of balance. A lot of these 60-40 allocations, 70-30, 80-20s are all out of balance because of this decline in bond prices and the rally in the stock market. So the potential here is for a rebalancing situation over the course of the next week or so. 10-year Treasury is about to trigger a money flow buy signal. At the same time, the markets are triggering a sell signal. This suggests we could see a bigger rotation now between stocks back into bonds here to go through that rebalancing process. So watch this carefully here. If the 10-year Treasury can get above this 20-day moving average, there's decent move up to the 50-day. That could bring interest rates back down here a bit in the short term. May weigh on stock prices here temporarily. But again, don't see a lot of downside risk here for the markets overall, but you definitely need to pay attention to this potential rebalancing and rotation risk, at least in the short term. Again, we raised a little bit of cash yesterday, nothing extreme, but definitely hedging our portfolios here a bit, at least for the next week or so. I'm Real Lance Roberts for 3 Minutes on Markets and Money. We'll see you tomorrow.